We start with the markets. The Dow starting the day out with a rally, but sinking into the close, ending at the lows of the day, just up 50 points. The Dow closing out the first half of the year in negative territory, but the S&P 500 is still positive for the year, and the Nasdaq posting its 8th consecutive quarter in the green. And let's take a look at some of the biggest winners so far this year. Netflix, a double, up more than 100%. Micron, one of the best in the show for the S&P 500, up 28%. Over in the Dow, Nike is the best performing stock this year, up 27%. And Visa, second in line, up 16%. So do you stick with the winners? As we head into the second half of the year, we thought it'd be the perfect time to play what else?
We love games, Mel.
A game of trade it or fade it. And you guys remember the rules, right? Easy. You're buying it, you're trading it. You're fading it. That means you're selling it.
So logical.
Got it?
Yeah.
All right.
Although trading it could mean that...
No further discussion. That's all you need to know.
Whoops.
Netflix is the first stock. Tim, you kick it off.
Okay, Netflix, ultimately, I think this is a case where the company, to me, has had a heroic run, up almost 100%. As you know, as I've said and as I've been wrong, I think the valuation is not supported here. I don't think they have the kind of moat around their business that people believe that they do. I think competition is coming from all the usual players. But again, I can't put Netflix down. I just say that after this kind of move, this has been parabolic. No, I'm fading it. Sorry, it took me a long time to get that out.
Anybody trading it? You're trading it, right?
Yeah, I'm trading. I'm very constructive on Netflix, and I have been for a long time. Look, I think this story is hitting every metric essentially that a growth manager wants to see them hit in order for the stock to continue to work. So I'm a buyer here. I continue to be a buyer.
I would trade it too. And kudos to Dave. He was on this right from the start. I got to give you a little respect on that one. The big move, though, for me is whether or not this is going to be a China trade, because it's not one, but it traded with the China trade. So it was a pseudo-China trade.
Hold on a second, you guys can hug this one out at another time. The bottom line here is everybody is priced in perfection for these guys. And what's been imputed by Disney and Fox and Comcast is that Netflix is so far ahead of everybody else and that they actually don't even need content.
Right, but the problem is, hang on one second. Wait. They priced in perfection, though, a couple of times, multiple hundreds of dollars lower than here. And you started off the show the right way. You said that you had been wrong on the valuation.
Is that what we're doing here on a Friday afternoon?
Yeah, apparently.
I'm being
3 minutes into the show and it's starting.
I'm being nice about it.
I think the bigger question, though, and Grasso, you alluded to this, is that with the China trade, we've seen tech stocks, particularly the high-flying ones like a Netflix, being the ATM for those downdraft days. And so the question is, are we going to continue to see that sort of pattern? And doesn't that factor into whether you trade Netflix or fade Netflix?
Yeah, I mean, listen, it's a tough one. We're halfway through the year. It's up 100%. Yeah. And, let's just remember, a guy who made 100% on it 4 years ago, Carl Icahn, sold it $300 ago. This has been an impossible stock. I think the fundamental bear case makes a lot of sense, and I think some of the M&A that we've seen in media may accelerate that. But to Steve's point, it's been that same bear case for 3 years now. It's going to happen at some point.
But it's not a trade war stock, and I know we've had that discussion. So I actually think in the ranker, which I think gets worse into July on the trade front,
it's not a trade war stock in that there's no exposure to any countries, but yet when there are trade war worries and the markets pull back, tech is usually
and a stock that's up 100% is vulnerable. So just to be clear, my point is that fundamentally they should not be taken down by a trade war conversation.
Micron's the next stock. Trade it or fade it? Grasso.
So this is one that I would fade it. I'm sorry, I would trade it at this point. I'm so confused.
You're so sure about this.
So this has been a range-bound trade. And for me, I look at it as I overlap DRAM prices with Micron. And if you watch it, they trade in tandem with each other. So we're at the lower end of the trading range. DRAM has flattened out. You saw Micron come in to meet DRAM. I do think it's a sideways trade, but I think it's at the lower end of the trade range. So I would trade it. I would buy it for a pop.
Now, this could be a trade war stock potentially.
Yeah, I think it gets it in both places.
Yeah.
Well, I think it's also one that has unusually high sentiment, and the stock doesn't act well. 2 times this year, they've reported a beat and raise quarter back in March, and then just a couple weeks ago, and the stock does not rally in those things. And just talking about the range, we know that this is a 7, 8. Multiple stock here. 45.
Should we put up?
What's that?
Trade it or fade it?
I don't know.
Play the game, Dan. Come on.
But to my eye, the bottom end of the range is really 45.
I think you have to fade it, and it's not because of the valuation. I think the valuation makes sense. I think it's a great company. I think the semis continue to be in the eye of the storm right now, and I think fundamentally they were probably overbought. So you add those two up, I think it's going to be choppy for Micron.
I would fade it here as well. I would fade it here as well for the short term.
I thought I said it in case I did.
because I think you'll get cheaper levels to buy. But the long-term trend here for me, I would be a buyer for a long-term investor.
I mean, this is a solid bounce zone. So I can't.
Are you still trading? Are you clear on what you're saying? Trading and meaning you would
Such an easy game, guys.
I'm not denying it, as Guy Adami would say. But this is right at the support level in the stock. We're right at the 100-day moving average. We're right at a fib retracement. If it's going to pop, it's got to pop right here, or else maybe you could see 45.
All right, next stock, Nike, David Seaburg.
Nike. So in full disclosure, I got this wrong as far as saying I wouldn't be a buyer at lower levels, several months ago. But look, up here at $81, I would be a seller. Fade it. Fade the stock up here. In my opinion, a lot of the good news is priced in. There's no real catalyst for another 3 to 4 months. And basically, I think China, the trade issues are an overhang here. 30% of the revenues do come from China. There is exposure there, and this will be a name that they do sell off if there's any sort of retaliation.
I think the consumer channel right now in China is not as vulnerable as the other parts of the industrial chain, certainly the technology chain. So, David, I appreciate your acknowledgement. It's been a tough trade for you. Let's call Nike your version of my Netflix.
It's the one I got
wrong.
No,
but I think
I got wrong. That's fine.
To your point, though, for a long time, I think you were right. Adidas was a better call. Nike was losing to the competition. I think Nike's got their house in order. I think North America is better. North American apparel is 32% of North America. That's better. I talked about last night. The sequential margins in North America on the growth side are up almost 900 basis points quarter over quarter. That's very important. It's still a U.S.
Did you trim your position at all today?
No, I haven't touched it.
All right. Last stock here, Visa. Dan, traded or faded?
Yeah, so this is one that hasn't had a parabolic move. It's up 16% in the year. It's up about 40% from its 52-week lows. And on a PE to growth level, it's actually pretty reasonable. So this is one where I'm going to say trade it. But if you look at that breakout level from late April, is about 127. I think there's a lot of stocks where there's a lot of positive sentiment, where there's some valuation support, there's growth support, there's secular trend support that you're going to get to come back your way a little bit at those prior breakout levels. So this is not one I'm saying buy it right here. But I think, between 127 and here is where you want to get back into this position.
I think you could actually buy it right here. When I look at the long-term chart on this, this is slow and steady, on cruise control. Buy it, trade it. What did I just say?
You didn't say anything.
I thought I said trade it. I thought you said you could buy it. Oh, you want me to stick with the trade?
Yes.
Steve, this is how you do it. Trade it. I like Visa because I think they're actually in a great place.
This is part of the fun of the game. I mean, we have no clue what we're doing. This would be a buy for me. If you go straight and steady, this is. I'm not talking about trading. I'm talking about the terminology here. This is as slow and steady from the lower left to the upper right that you can get. I would be a buyer of Visa.
I'm a buyer as well. I think it is a slow.
You would trade it as well.
I'm a trader. I'd trade it. Look, the consumer is strong, super strong. It's going to continue. This is a name you could buy and hold forever and give to your grandkids. This is a stock that's going to continue to work.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.